If you or someone you know recently received notification of a rate increase on your long-term care insurance policy, this brief video will give you a good overview and some ideas about your possible next steps. Hi, my name is Jesse Sloan. I'm Executive Director of the American Association for Long-Term Care Insurance. We're a trade organization. Our primary role is to help educate both consumers and insurance professionals. And certainly the subject of insurance protection and in rate increases, that continuously raises lots of questions from people. What I thought I would start with is some quick overview of what's going on within the insurance industry, because understanding why rates are going up is really paramount to you helping to make the right decision about what you should do for your own individual circumstance. So the first thing consumers have to know is that once you own a long-term care insurance policy, you have a significant lifetime chance of using your policy benefits. Most people have purchased a policy with a 90-day elimination period, EP, or deductible. And if you bought it at age 60 or even at age 70, as you can see from this slide, industry data shows that a little over 1 in 3 people who own a long-term care insurance policy will actually find themselves having some sort of claim. Now, no one can accurately predict how long a claim you might actually have, but every year we survey the leading long-term care insurers and we ask them a question. What is the largest single amount that you pay to just one individual over the past year? This was 2014 data, and as you can see, some individuals have gotten at least $100,000, $150,000, and in one case, $346,000 paid just in the one single year from having their own long-term care insurance policy. So insurers are indeed paying significant claims every year. Indeed, the nation's long-term care insurance companies pay out billions of dollars each year. In 2014, the long-term care insurance industry paid out $7.8 billion with a B in benefits to policyholders, about $270,000 in total. And the companies know that they will continue to pay claims because the population of policyholders keeps getting older every year. The older you get, the more likely you are to need long-term care. And so by 2032, the insurance companies know that they will be spending about $34 billion in claims. And that's a reason why they accurately have to make sure that they are charging the right amount to be prepared to pay those claims. Now, nobody likes to think that they're going to have to pay more for something, and that's totally understandable. I don't care whether it comes to gasoline, your newspaper, or a gallon of milk. But the fact of the reality is that prices do change. One of the misconceptions about long-term care insurance is that when a company notifies individuals about a rate increase, that basically it's a take it or leave it proposition. It never is. The companies always will give you some options to change the formulation. Now, in general, only about 1 to 1.5% of individuals lapse or cancel, drop their coverage. Most people pick one of the options. The only real national study that ever looked at this was one for the federal government. The federal government has the largest long-term care insurance plan in the country. It has about 270,000 participants, and 144,000 of them were subject to a rate increase. And what you can see from this slide is that 1.6% of them did lapse the policy. The interesting thing is that 76% experienced a rate increase. They agreed to pay more for their coverage. They chose to keep what they had in place. 23%, however, reduced their coverage, and as a result, they ended up paying less than what they were paying previously. So what should you do if you or a loved one is notified that your long-term care insurance policy is going to be subjected to a rate increase? The first thing you should do is review your policy and your current financial situation. Really look at the policy and speak to the insurance company. Many people who bought policies years ago see the stated daily benefit amount, but they forget that if they chose an inflation growth option, that policy benefit has grown over the years. And so you really need to understand the current policy value and your current financial situation. You may be able to look into say, you know what, we can reduce, not cancel, we can reduce the coverage and it will be sufficient because our income is up, our stock portfolio is up, our house is now paid for, our situation has changed. So the first thing to do is to review. The second thing to do is to speak to the insurance company. Make sure that you clearly understand the options that they are putting on the table for you. Most times people call up the association, they're all upset because they had a policy with a 5% compound inflation option, and they don't understand that all the insurance company is doing is saying the rate increase is going to affect you if you maintain the 5% option. But if you lower it to 2.5% or 3%, then you are subject to no rate increase. So speak to the representatives. They really are there to explain and to help you. Only cancel the policy if you really believe you no longer want long-term care insurance, because once you cancel it, you cannot go back and get it back. And if tomorrow something happens, well, then unfortunately that's going to be your situation. But even if you do choose to cancel it, find out from the insurance company what benefits you might still qualify for after termination. Policies often have a small residual benefit, perhaps equal to the premiums that you paid in. That could be substantial, but you must know that you have it so that you could file at least for a claim. And the last one I will tell you is it's very, very, three varies. It's very rare that you're going to be able to replace your coverage with a new policy that will cost you less and have equal benefits. So really, it's a waste of time to try and shop around for new coverage, and I'll explain more about that in 1 second. Here's why it's really a waste of time for most people to compare. If you've had your policy for only a couple of years, maybe 2, 3 at the most, and you're still in very good health and you're in your mid to late 50s, maybe then you can compare. But beyond that, the older you are, the more likelihood the situation is that you're going to have health issues. And indeed, long-term care insurance companies today scrutinize policyholders, or applicants rather, much more closely than ever because of the risk of paying out large claims. As you could see from the slide, by the time you hit your 70s, almost half of all the people who take the time to apply for long-term care insurance are declined. The second thing is typically benefits that you may have purchased years ago, like lifetime or unlimited coverage, they're not even offered anymore today. So if you look and say, I'm trying to compare what I have and see what I could get with something new, you're not even going to be able to match those benefits. And lastly, we are in a very long, sustained, low interest rate environment. That has wreaked havoc on lots of things. It's been great if you wanted to refinance your mortgage. It's been terrible for lots of investment and insurance products. Long-term care insurance is one of them. So many people who had a 5% or have a 5% annual growth option on their policy, they are being subjected to rate increases. And so if you try to even compare today what a policy with 5% option would cost, you would be shocked that it would be 3, 4, 5 times more than what your policy is with the rate increase. So, it just, on these circumstances, I'm telling you, it's very, very rare when you're going to be able to find coverage for anywhere close to what you're going to pay even with the rate increase. So thanks for taking the time to watch this video. If you are an adult child of someone who has long-term care insurance and you'd like more information for yourself about this protection, there are 3 pages on the association's website that I think you'll find particularly helpful. The aaltci.org/guides has access to 6 guides that I've written and have appeared in Kiplinger's Personal Finance magazine. You can read them all online. There is no sign-in to access them. You just go, click, and they open up. /ideas has some real situations, real examples of real people who purchased long-term care insurance, but they had unusual circumstances. And by working with a long-term care insurance specialist, they were really able to get excellent coverage, typically better coverage than they could have, would have gotten otherwise for less money. And then lastly, aaltci.org videos has a range of association-produced videos on reducing costs, getting coverage, etc., that I believe will be helpful to you. So thanks again for watching. If you have any questions, please feel free to speak to the insurance professional who sent you the link to this page. If you're not working with one and you'd like to be connected with an endorsed long-term care insurance professional from the association's membership, please do call us, 818-597-3227. Again, 818-597-3227. We'll be only too glad to help you. Thanks.